Tell us more about what are you working on Nasdaq?
Yeah, maybe it would help to give you just a little bit of background on kind of what it is I do at Nasdaq. So I'm Senior Vice President of North American Markets, which represents all of our markets businesses in this continent. We've got equities exchanges, obviously the Nasdaq stock market, United States. We've got actually 6 listed options exchanges we operate in the US, and then 3 exchanges in Canada in the equity side. So quite a bit going on in all those areas. And within the North American markets business, I basically do 3 things. I run operations for the businesses. We have a transformation office, which I run, which kind of covers anything that's like a transformational project. Like, for example, we're going to 23/5 trading from 16 hours a day to 23 hours a day. We do a lot on the AI front. And we think about AI and sort of on the business, which is kind of how we operate, and in the product, which is what we supply to our clients. And then we have our own internal project of completely modernizing and transforming our operations. And then the third bucket is really market structure and public policy, and I think a lot of this overlaps with the things you're talking about here too.
So tell us more about tokenization and what innovations you guys do here at Nasdaq.
Sure. So tokenization, I think, is a term that people hear a lot. It's a crypto native type term, but people talk about it a lot with regards to tokenizing real world assets, and in particular, people are interested in tokenization of U.S. equities. I think mostly because it's such a big market, and people want to see modernization, evolution, innovation in this space. And so there's been a lot of excitement about tokenization in US equities. And just to take a step back for a second and just talk about US equities as a whole, it's a very, very big market. It's trillions of dollars in market capitalization of public companies. It's certainly a market that most of the world is very envious of. We see a lot of different countries who wish they had the capital markets of the US. And so they function really well. They're very, very efficient. So these are all good things. And we want to keep those good things. But at the same time, we want to make sure there's room for innovation and evolution of the markets. And so we're stepping into that role a little bit when it comes to tokenization. We want to see change. We want to see positive use of new technologies. But like I said, we want to kind of keep the key benefits of the current market in place. And so what we've done is we've gone about it and sort of tying the 2 worlds together a little bit, where we're trying to use the traditional path to bring in new technology. And we filed with the SEC to allow trading of tokenized securities on Nasdaq. And we took, I think, I'll call a first step in a multi-step journey. So very simple and straightforward, the way we're proposing to do it. And that is, anyone trading on our market can tell us, hey, I want this security to essentially settle in a tokenized format. So you have an option of continuing to do it the way you do today, or you can have it settle in a tokenized format. And really the difference there is pretty straightforward. You've got the traditional format where you've got the security represented in some database at the DTCC, essentially. I'm oversimplifying a little bit. Or you have the option to have it digitally represented on a blockchain. And we're partnering with the DTCC in this step to do so. And the other thing we're doing as part of that is we're not changing settlement cycles. So U.S. securities right now all settle T+1, meaning the cash and the shares move the next day or overnight. We're doing that for a reason. There are opportunities maybe to decrease risk, increase efficiency with different settlement cycles, but we want to do this as a step. Again, we're trying to lead and bring the industry with us as we evolve this thing. So, we're trying to do it in a straightforward, one step at a time, sort of walk before you run type of way.
So from your vantage point overseeing the markets, what do you think we can learn from traditional finance and digital asset space, how to make the system resilient?
Yeah, it's a great question. So I mentioned how the market is really efficient, and so that's a good thing. We want to keep it that way. When we think about the markets and how we want to see them continue to develop, we think of a few things. We think of liquidity, and that's just you have the things to buy or sell when you want to. Transparency, which is like clear rules of the road. Being able to understand the price and the product you're getting when you're transacting in it, and then integrity is key, and that's all about sort of trust in the system and resiliency in the system. And these things I think are all very good in the equities market right now, but it took time to kind of develop that way. And underpinning those are two pillars we think about a lot, which is investor protection, or just the endpoint of the investor, and then the other endpoint is obviously the issuer of capital and capital formation, and those really underpin those. And we want to make sure that that structure stays in place, and we keep in mind investor protection and the issuer and capital formation, frankly, as we move these market forward. And we've as a listing exchange, we think about that a lot.
So how do you think we can bring this innovation to the traditional markets without compromising trust that you already built here, but still we keep innovating?
Yeah,
what are the risks you see along this process?
Yeah, it's a great question. We could probably spend the whole time just talking about that specifically, but it's important to have, I'll say, right size regulation, and what we see over time, especially if you extend the timeline long enough, is you sort of see these swings from, on the one end of the spectrum, you've got I'll call it sort of looser regulation, which can be good for driving change and that type of thing, but at the same time, it may leave gaps open for things that are ultimately gonna not work and maybe hurt an investor. I think on the other end of the spectrum, you got really tight regulation, which has really strong protection, but then you see less of the innovation, you see less of the new capital formation, and we actually see this to some degree with public companies coming to market. It's less now than it used to be, and some of those regulations probably need to be right-sized. And where you ultimately want to land is somewhere in the middle. So you've got a bunch of innovation coming in, but you've got protections of the market, and then you'll be able to evolve the market in a really positive way, where you've got the innovation, you've got things moving forward, but you're also continuing to protect the end investors. And the reason we know this, and we've kind of learned this, is because we've seen things over the last few decades evolve, and you've seen the things where it's been missed, and you've seen some things happen that weren't so good, and then you've seen these areas where we've gone a little bit too tight on regulation.
So AI, you mentioned this in the beginning that you're working on that. Want to touch base a bit on that, like how you guys implementing this to your processes or doing anything else? Yeah,
and just to touch on a little bit the other parts of the company, because I think AI comes into play at a lot of places. We provide technology to all parts of the financial system. We always say we want to be a trusted fabric of the financial system, and so we try and kind of hit the whole spectrum of services. And we have things like market infrastructure solutions. We have things like collateral management, where some of these things we're talking about becomes really interesting. So with that as a backdrop, understanding the other things that Nasdaq does besides just operating markets, we have sort of a framework of how we think about artificial intelligence and really new technology, but in particular artificial intelligence. And it's kind of two buckets. I mentioned them in the beginning, but I'll go into a little bit more detail. We have on the business, and this is just like how we operate. How can we be more productive? How can we be more efficient? How can we reduce risk and all that kind of thing within our operations? And then in the product, which is the obvious, how can we bring better product to our clients, and how does artificial intelligence allow us to do that? And so we're doing a lot on both sides. We've got a tremendous amount of things, especially in the transformation project I mentioned in the beginning within how we operate just in the North American markets business. We are using artificial intelligence to get much better, cleaner, faster, and all that good stuff, which actually indirectly does really help the end client because you can provide them better service. And then we've launched the first exchange-approved order type called Dynamic Mellow. which has an artificial model tied to it. And in our collateral management area and in our surveillance area, surveillance is probably one of the most interesting areas where we have it in the product, where we're using artificial intelligence to get way more efficient at how the analysts who are using our surveillance products are able to research sort of alerts they get in the market or in compliance as far as figuring out what's going on here. As you can imagine, these types of analysts will get sort of an alert of some sort based on algorithm, and they'll have to go research that. And that can be pretty manually intensive. So if you think of that immediately, you're like, oh, well, could artificial intelligence kind of make that quicker and more efficient? And so that's exactly what we've been doing. And it flows down to how we surveil the markets as well, on our own markets. So a lot of exciting stuff going on there with artificial intelligence. I think we're very early stages as well.
Gotcha, thank you. So we have a lot of innovators in the room who are building in the digital asset space. What do you think should be like priority for us to build resilient systems while still innovating for the next 12 months?
Yeah, I think it does tie back to some of the things I mentioned about sort of transparency, liquidity, integrity, and keeping in mind who are the end beneficiaries and making sure they're first in mind. It's a very fast-moving area, and so there's a lot of ways to bring new product to market and make money in a lot of it in some cases, which is a good thing. But you want to keep in mind who is the end user and beneficiary, especially when it's an investor. One of the things we've done really, really well in U.S. equities, and I would say even more so in the options markets, is spend a lot of time on investor education. And so I love using the options markets as an example because they've grown tremendously over the last 5 years. I don't even know if it's like 10x at this point, but it's a really great number to see the amount of activity. And a lot of that's driven by individual retail investors. And now you might think they're generally not well informed as far as what options are. And actually, because of the educational efforts, that's generally not true. And the tools that are available to them through the brokers they use are tremendous tools. So they're almost have professional level tools available to them. And the education combined with that allows them to do really great things and use them in great ways. And so I think that's a great model for us to use as we continue to evolve, whether it's through tokenization of traditional assets and real world assets or through other less traditional assets that are growing in popularity. That education piece and making sure they have the really good tools available to them that are similar to what's available to professionals, I think is going to drive a really positive thing, which then underlines the trust, right? The name of this event, trust and the confidence in the system really pays dividends when you're in a market stress situation, because then people, they may not like the price on the screen, but they believe it's an accurate price, and they can get in and out of their positions. That plays a really important role in those types of situations.
Thank you, Chuck. It's really, we don't have much time, but thank you for bringing all the insights from the building market trust for ages. And yeah, hopefully next year we'll show more examples of digital asset trust space. Thank you.
Thank you.